All right, good afternoon, traders. Welcome to a very special edition of the Pirate Traders live stream, where today we're going to be hanging out and talking to the one and only Bruce from Bookmap. If you don't know Bruce, he's basically the lead educator for Bookmap. He does live streams every single week talking about what's happening live in the market. And he is an unbelievably valuable resource to turn to for education when it comes to this software. So he has graciously agreed to join us and talk to us about it here today. How's it going, Bruce?
I'm well. I'm well. How are you doing, Charles?
Good, man. Good. So basically, I'll just hand it off to you in the beginning. Give us a basic rundown. What is Bookmap? Why would short-term traders be interested in it? And, what are some key things to take away?
Okay. What Bookmap is we're just a charting platform here. However, the uniqueness is the way we visualize the market data. That is very different than other charting platforms, and we think it offers an edge in here by visualizing things you just simply cannot see in other platforms. Just for anyone who's new in here, let's just go through it. We do have a subchart here, which I'll get to a little bit later. But there's only 3 elements on this Bookmap chart. Now, when traders look at this, they're like, whoa, what is this? And how does this help me? Because it looks very, very complex. It's actually quite the opposite. It's very, very simple data. This is simpler in concept than if you're looking at a candlestick chart with a couple of indicators. I want to get more into, like, some of you guys are using Bookmap already, to point to some areas where you can see some things that might give you an edge in here. Right now, we're looking at a candlestick chart, and there's nothing else on this except candles. What you're getting here in your candlestick chart, and we're all looking at some sort of aggregated data for the most part, and we have for decades, is open, high, low, and close of a period. You do not have access to what happened within that period. So this is giving you already with Bookmap. If we look at the first element on the Bookmap chart, it is best bid and offer. All right. And that is going to show here the pure price action. There is no aggregation. So what do I mean? If I zoom in here, okay, see here we have 2 candles, and we have open, high, low, and close of this 5-minute period, and then open, high, low, and close of this 5-minute period. What happens in between here, you do not have access to. You just see a bar and another bar. These areas matter. There's an area of consolidation down here, and it kind of dribbled down a little bit further, and it consolidated here. If we go across, you can see that it consolidated in here. Okay, it's by understanding the price action between these candles, you're starting to get some insight. And this is just showing best bid and offer is allowing more transparency. Now, the second element on the Bookmap chart is simply volume dots. Where are the aggressors' transactions taking place? Market buy and market sell orders. Red dots are market sell, green dots are market buy. The aggressors move the market. They take liquidity from the best bid and offer. The bigger the dot, the more traded. So we have a context here now. We understand sellers took this market lower, buyers started to come in and went back and forth in here, right? But we can see we're still making lower highs slightly, and we're making lower lows. And we see a barrage of selling coming in here. One more test by the buyers. They're not able to make a higher high. Once we see the sellers come in again here, look out. And that's when it's going to go.
Hold on. Can I pause you just for 1 second there? And
sure.
Just leave the chart as it is? Okay. So what he's basically saying is, if all you're looking at is the candlestick, over the 5 minutes, you're just watching a thing bounce up and down like this. Within this 5 minutes, you're just watching it go up and down like this. Understanding the structure of what the market is doing within that time frame is difficult to see, and that's what he's pointing to. It's like you can see the structure where the market is creating its support and resistance, and you can not only, of course, you can see that with a candlestick because it's the high and the low, but you can watch it work its way through in real time, which gives you insights minute by minute as to what's happening. Okay, cool. Carry on.
Yeah, exactly. The context here that I was just talking about is, well, in here, actually, it looks kind of strong. Actually, some buyers came up and we don't see many sellers down here. In this range, then, we're talking about the context of the volume where the transactions are taking place. Again, they tried again here. And then the sellers came in and just annihilate the bid and take it to a lower low. Buyers try it one more time here. And they just can't take it higher. Once this is felt by the market here, and we get some sellers down here, look for the trend continuation. And these are just kind of like order flow. The order flow is telling you something in here. Look at the candlesticks. Can you read that in the candlesticks? It's really difficult. So just like Charles was pointing out, the market structure here created by the best bid and offer with the context of the transactions within the structure is giving you insight. So, and that's what we want to take away here, is to gain an edge or some insight. Now there's one more thing that's lacking on this chart, and that is the order book. Okay, so where are the buyers and sellers offering and bidding? And that's where the heat map comes in. Okay, so we have the heat map now. And these areas here, these orange and blue, white, yellow areas here, all it is showing here is limit buy orders on the bid. Okay, now this is historical. It's not from your dome or your level 2. This is showing you it's the same information as your dome, but it's recorded and plotted on the chart. So now you have access to it. So this is very high liquidity. The scales up here, red and orange, very high liquidity, then yellow, then white, then blue, and then black. So we have another context in here. How much do people really want to buy down here? Or how much do they want to sell above the market? So there's a lot of people on the bid down here. There's people on the offer up here, and the buyers never took them on. They never came up into these areas here. So there's some weakness. There's some softness in this market. Sellers come in and they trade into and through all of that high liquidity here. Okay, and there's still more selling pressure. Okay, because we see the buyers come back in and retest back to where it dropped from this structure. Not enough buyers. We see the sellers come back in again, and they still have appetite. So they're going for this liquidity here, this liquidity here, this liquidity here. Now, it trades into and a little bit through it. So there's still more selling pressure, but you'll note how we're getting little bounces in here as well. Okay, you'll see that. And the reason being is because now we're understanding this context in here, that there is buyers on the bid. And now we're not finding enough sellers to trade, enough sellers to trade through it. But now they've absorbed also a lot of that selling pressure. So buyers can kind of, pull back and try to attack back up into these areas here too. Finally, we get some of that here. And the buyers come in and they start to break the structure that we were just talking about. See the range in here. And this is a swing here. And we're starting to see buyers back up in here now. And then if we start to see that, we're looking for them to attack the next swing and area of liquidity here. And then the next one up here, this is a good one. Not only because we have the structure break here, but we also have liquidity here. So we're looking for those buyers to attack and trade back up and to meet the supply up here. Okay, so anyway, these three elements that's all we're showing here on Bookmap. And we're putting that context together. And then we trade back in this range. Look at this range back up in here. And then, wow, okay, more buyers back up again, looking for a move back up to high liquidity. Okay, so, why these levels? Because that's where the sellers are, as simple as that. All right, so anyway, it's really just these three elements on the chart. And we can take the candlestick chart away now, as it just kind of gets in the way, and then start to understand this context. Right. So anyway, that was just a kind of an overview here of what Bookmap is. And Charles, I don't know how much more depth you want me to go into this with your followers.
No, that's a great intro. So now I just want to go through. I got a couple questions for myself that I just want to run through and ask you.
Sure.
So this one's a random question on my book map, like because I turn off my computer at night and then I turn it on again the next morning.
Sure.
I have like a gap where I can't see what traded in the overnight. Is there a way to go back in and get that data back?
You can subscribe to up to 24 hours of backfill data. It's like $14 or something like that from DX feed. Now, I think you're connected to Rhythmic, right?
Yeah, correct.
Yeah, and we recommend that for futures. The data is very high quality, and it shows even more than just that. It shows market by order data, and stops and icebergs are possible to uncover. So that's why we recommend Rhythmic. But you can also, that backfill data is not Rhythmic, it's not MBO data, but it is very, very helpful though. So it's not as high quality. The reason being is so you can download it. You don't have to stay around all day long for it to download. There's a lot of data here.
Yeah.
So anyway,
and the alternative is just leave my computer on overnight and let it collect that data.
Yeah, I mean, I would recommend that. It depends. Like for example, what I do to keep things light, as you can see, I have many symbols open, right? I have stocks, I've got Bitcoin, I've got, several futures markets here open. So it's a lot of data. But if you look at my ES chart, it starts here at 7 a.m., a little bit before. I'm all the way zoomed out here. This is enough for me. I'll look at my higher time frame candlestick charts to get a feel for what happened yesterday. My levels, I may mark up my levels in a column or something like that, and then look for the order flow events around those levels. So it's up to you. You can get that backfill data in there, or you can just start up in the morning and then kind of look at your higher time frame and then zoom into Bookmap for lower time frame stuff.
Okay, cool. Okay, so my next question is the columns all the way on the right of the screen. It says COB, CVP, and SVP. What do those mean and what's the difference?
Good question. We have a lot of column data in here and different types of data. The COB, if we hover over it, it stands for current order book. So if I zoom in here a little closer and zoom vertically, this is your dome, basically. So what you see here, these numerical values at the, on the price ladder here, these are limit sell orders, and that's all they are. And then down below, these are limit buy orders down here. Okay, as we're selling off into some pretty high liquidity right now. And that's all it is. There's nothing nothing more complex than that. This is your depth of market. This is what I was saying earlier. Notice how these numbers are always changing in here very, very quickly. Okay, that is the adding and pulling of liquidity. But once they change, you don't know what there was there before. What Bookmap is showing here, see the striations here in the heat map, that too is the adding and pulling of liquidity. That's all it is. It looks like it's really complex in here. It's not. It's just adding and pulling of liquidity, as simple as that. But we can start to gauge and understand the demand down here, for example. And here's our answer. So it's kind of a funny answer. Yeah, they got filled here, 86.5. They got partially filled because they pulled some of that liquidity. It was dark orange here, and then it turned to white and yellow in here. So it's kind of like, yeah, we kind of want to be buyers here, but not really. And here it is again. The sellers hitting the bid again, and just starting to kind of trade in here a little bit, nibble into this 86 and what is it, 86 and 3 or 85 and 3/4 there. So again, we're just starting to understand the auction process. Do they really want to be buyers down here? That's it. And then CVP is actually historical, and SVP is actually historical as well. This is showing you the the chart range volume profile. That's what CVP stands for. Okay, so it's showing you if for this viewable range right now that I'm looking at, this is the profile. This is the profile. If I zoom in, watch, if I zoom into this little area here, now I see a different profile. Okay, because whatever is in my viewable range, as soon as this data goes out of the profile, it will change. You'll see it change here. that's what that is. Now, the SVP stands for Session Range Volume Profile. This is showing you your volume profile from the entire session when you opened up your Bookmap.
That makes sense. So, and I know with those two, you can choose whether you want to see both the bids and the asks, or if you'd like to see the delta between the two. Is there a way to see the delta on the current order book?
Well, on the current order book, there's no delta. I mean, it's either well, you can look at, we can add a new column in here, and you can look at the let's see, what is it? The quotes delta. Okay, so here you go. So this is liquidity. If it's a negative number, it was pulled. If it's a positive number, it was added.
That's exactly what I was looking for. Yes.
Okay, well, there you go. I find it a little hard to read, and it happens very, very quickly. Yeah. But there's another way of looking at this too. You can add, which I kind of like, but just want to show you here. Add another current order book, and then right-click in here, and we'll configure it, and we'll do an aggregate view, and then also I'm going to set a depth here. All right, so I've put in 10 on the offer and 10 on the bid, and then the white number up above is showing you the total here of all of the aggregate from, you know, one plus the next plus the next plus the next. So there's 700 or 800 orders here, basically. So it's just kind of giving you some insight to like the balance of the book, 10 out, 10 deep on each side, and if there is an imbalance. So we see a little bit of imbalance right now. All right, so let's see if we get more sellers here, and maybe they can hit the bid down into these levels here. So just some things. There's so many different. We're very feature rich. We have many different components in here to take a look at. And you're right. The CVP, and just we can configure this and look at delta. Okay, so this is the sell minus the buy, or buy minus the sell here, and it'll just show the delta. Or you can also split out this data and kind of compare the delta, sellers on one side, buyers on the other. Yeah, it depends. Whatever you want to look at, we got it basically.
Yeah, only serial killers do it that last way. Having to visually tell the difference between the two. No, thank you.
Oh, there's a lot of very, very low time frame traders scalping that they really want to see that, and they will be resetting these. You can do all sorts of resets in here as well. You know, whenever you want, reset on double click, for example. So okay, just traded in here, and I see an imbalance here. Okay, I'm still looking for it, but if I see some buyers up here, I'll double click and I'll reset it. You know, so yeah, and they're just looking for little areas to kind of scalp in and out of, looking for some sort of imbalance. Like I said, we can go on and on and on about all the different settings.
Yeah, for sure. Speaking of going on and on about settings, can you explain to me the CVD at the bottom of the screen and how to use that? Yes.
Okay, so this is our sub chart down here. And what we're looking at right now are stops and icebergs. And you have access to that, right?
No, I don't think so. The stops and icebergs? I don't think so.
Okay.
Well, I know you ask for it. I just
I'll give it to you right after the webinar here.
Okay.
I thought I set you up with it. So
I think I had it on. Is there a difference between when it's on the chart and when it's the thing?
There's
at the
both.
bottom?
There's both.
Okay.
There's two different. There's separate indicators.
Can you explain the differences between them?
Yeah, sure. So this is showing you on the subchart, you know, plotting stops and icebergs. The red line are stop order transactions. The blue line are iceberg order transactions. There's different ways to configure this as well. Sometimes, you know, traders want to look at spikes. Other times they want to look at the summation, like kind of like cumulative volume delta of buy minus sell over time. So, you know, if I zoom out, you know, here are the icebergs for the day. There's quite a bit of selling icebergs here. We saw it during the webinar today. And quite a bit of people getting stopped out to the upside, you know, again and again. So here's a dynamic between smaller players using stop orders and larger players using iceberg orders to get filled.
So what makes the chart start to move up to the right or down to the left? Is that throughout the day cumulatively there's been more, or in that moment there's more?
Yes. So again, the stops here is just buy minus sell. We know that more people are getting stopped out here. These are stop transactions,
I
but
see.
more people are getting stopped out to the upside.
I see. Okay, that's very cool.
Yeah, it's pretty amazing to see the actual type of orders transacting within the order flow here. Yeah, we think it's an added level of transparency into the market.
Okay, and then when we see the icebergs on the screen, what's different about that? That's just showing us the numbers, right?
Well, so we can zoom in and kind of look at, like, some of these spikes in here, and so, oh, okay, it relates to here, but we still don't really quite have the details in here. So we added a new indicator in here because it was highly recommend or suggested, and we can show on chart precisely what unfolded in some of those areas here. All right, so again, blue is always going to be icebergs, red is always going to be stops. These were people getting stopped out 134 down at this level here. They were long, but the transactions are sell, so they're getting stopped out to the downside. And the iceberg is the blue, and the E means executed, and only 4 icebergs were executed here. But you'll see today, especially, like, there are some areas where we see hundreds, but there were thousands earlier. So a lot of activity today by larger players. Yeah, here's 1,000, here's 1,400. There's, like, we saw 6,000. Here's the 6,000. Yeah, we saw this earlier today. Pretty impressive.
So sorry, can you just explain, when you say an iceberg, what makes that volume interesting?
Yeah. I'm glad you asked, because today was an excellent day to show this. So let me zoom into this area here. Okay, so here's high liquidity, right, at 37.95. Price trades up to it, and you see a lot of buyers here, right? The green dots, these are aggressive market buy orders. However, and look at all these buyers in here. Look what's on the bid here, or I'm sorry, on the offer, only 40 contracts. Yet here's 250, here's 331, here's 1 or 21, here's 45 or 153, 410. Why aren't they able to lift it up into some of these higher levels here? Because there's someone here on the other side using an iceberg order to absorb all of this buying. It was pretty incredible.
So iceberg means it's hidden. We can't see it in the order book.
Well, yes. The iceberg order is an order type that larger players use to hide their liquidity. They don't want to show you that they have all this liquidity, because it's kind of like showing their cards. So what they'll do is use this order type, and it will only send, let's say I have 1,000 lots that I want to sell. And I don't want to show it in the order book, 1,000 lots. So what I'll do is I use an iceberg order. Now my 1,000 lot will remain at that price level, but I do need to send something to the order book. Maybe it's 10, maybe it's 100, a portion of it. That's the tip of the iceberg. That part shows in the order book. Once it transacts, my iceberg order immediately sends the next portion, and the next portion after that, and the next portion after that, until it's filled, or until I cancel it, or until price goes away from that area.
That makes so much sense.
Yeah, and that's it. So this guy it's incredible. Like, it wasn't just this price level. It was like 90 at this kind of 37.95 for a long time. It ended up trading 6,000 iceberg orders here.
So he's got some size.
He's got a little bit of size. Yeah, it was fully executed. This guy got it exactly. There was actually 2. The little /2 means there's 2 icebergs there, fully executed for 6,000 contracts. So now the dynamic is interesting here, because if we look at it, you'd be like, why the heck isn't it coming up? There's enough buyers in here to come up to, it should trade up to we were looking for the move up to 3,800. Why isn't there enough? And it's like, well, this guy is just relentless. He's not going to let it go. He's going to get as much size on as he can. We see it in stocks a lot. We don't have an iceberg indicator for stocks, but we see icebergs that kind of behave like this on stocks. They'll take 50, 100,000 shares, whatever. But in futures markets, usually they'll take some, and it'll maybe go a little higher or a little lower. They'll take some more someplace, but no, this instead is just, no, 37.95. I'm a seller.
Yeah, that's what was so unusual to me, because like you're saying, normally they slowly ladder their way in when they're accumulating a position, and this was just like all at one level. It was so bizarre.
Yeah, and it started way over here, just after 10 o'clock, and then it got filled like 45 minutes later, basically.
Wow, there you go. Okay, very cool. All right, let's move on. So can you explain the difference between shorter term high liquidity and longer term high liquidity, and like how to tell the difference between those participants?
Okay, so this is a great question. This is something that a lot of traders, when they start to understand liquidity a bit, because we it's been recent years that we have access to this kind of data, being able to see liquidity in the order book. Now, longer term high liquidity is something that has been in the order book. If we zoom all the way out here, like down here, this is longer term liquidity. Now they came in like afternoon, just after 12 p.m. East Coast time, and they're still in the order book down here at 37.50. You can see it in the pre-market here before the cash open, and then they got filled here. So, the longer term high liquidity is, it's just showing you where there's real supply and real demand. At least as much as we know it, that they want to be buyers way down here. Once the market kind of understands that, it's like, oh, okay, well, if we want to sell, we can find buyers down here. So it's kind of like advertising in a way as well. In stocks, it's even much more impacted. If you look at some of the stocks in here, the larger players, they just park their orders and say, like, I'm a seller up here at 46. I'm a buyer down here at 45 and 44.5. With the futures, they kind of move it around and a little bit more, as you can see. But the difference is longer term high liquidity it can act like a magnet, because price knows, or the market kind of knows, that's where they can get deals done down in these areas here. The shorter term high liquidity is something that is it pops into the order book and can be a surprise. And then we want to understand, like, you can see these little areas in here. This is shorter term high liquidity, very high liquidity here, and then here, and then here, and again here, etc. But what we want to understand is the relationship between this and the aggressors, the participants in here. Now they pulled that liquidity here. He came in with high liquidity, and then this was the interesting thing. This is what we want to judge and understand. Typically, this kind of high short-term liquidity that's very aggressive and close to the order or the current best bid and offer, it usually repels price. Typically, it's like all of a sudden there's like, whoa, there's a lot of supply here. And usually it's like, I'm not really interested in buying any longer. And you'll see the market trade down, and they'll pull on the bid here, and you'll see the market trade down into liquidity levels like this. This one didn't really work, and they tried it again up here. Now it's starting to work. We see the reaction to this was sellers. The reaction to this, some selling, a little bit of buying. Here they actually stayed in the order book and transacted. So it's not really a spoof. A spoof would be something where they're showing that high liquidity like this here, but they have no intention to trade. They just want to kind of have an imbalance in the auction to potentially like manipulate or move the market. I shouldn't say it that way. I mean, just like they're players in the market, they're showing high liquidity. What's the reaction to that liquidity is what we want to know.
Yeah.
This here is, again, high liquidity, but they did stay in the order book and they started to transact. This is not a spoof. But we see that not much transacted here. There's just not enough buyers interested. So again, we roll over, we see the sellers at these lower areas. Now we can target some of this liquidity down at some of these levels.
Yeah. So the thing I noticed, and it sounds like you see it the same way I do, is it feels like the longer term liquidity is a magnet that's pulling price towards it. And the shorter term liquidity is almost pushing it away to kind of try to like work it down to that larger liquidity. Does that sound like what you see?
Yeah, I mean, typically that's the case. You can see it in here and in here, and it is working, right? But here they're doing it again. But now we're finding, look in here, we're finding enough buyers interested.
Yeah,
so they're trading.
It was working earlier. Now it stopped working. I see.
Exactly. Now you might see a flip. They might flip to the other. You might see other players flip to the other side, right? And maybe show that kind of order flow or order book and balance on the other side. But they're getting filled in here, and I don't see too much kind of that behavior right now. Yeah, but yeah, that's pretty typical. Now it doesn't have to be nefarious. There could be just players in here that they're chasing the market, trying to get filled, and they're not getting filled, and the price is going against them. It really depends. We'll see all sorts of things in here, like ignition algos, or algos chasing, trying to get filled. Let's see if I can find one of those. But the way that this is pretty standard stuff.
Yeah. The biggest thing I've been really trying to push on people lately is like not to get overly concerned with the idea of manipulation, or like, they're trying to trick you. They're trying to like, no. If you just step back and relax, there's a process to how the market does what it's doing. They're just doing their part, and you can see what they're doing and react to it,
Yeah, I would say that's really good advice, because, you don't want to get caught up in all of that. It's just like, some one conspiracy theory after another type of thing. What we need to understand in general is what the participants think of the market. And that can be seen here in the order flow. So we can actually use some of that information to our benefit. Like, wow, okay, well, there's high liquidity up here. If it's a spoof or whatever it is, it doesn't matter. What does the market think of it? And we see they did not tangle with this. We start to see if sellers come in. And then we see the move continue to the downside here. So what I have found as well is just the better I am at objectively reading the order flow, and just what is the chart telling me? What are the participants in the market telling me via the action from their orders? The better things work out.
100%. Okay, so now I just want to do some quick vocabulary. So just give me like quick answers as if I was writing like flashcards to learn what this stuff means. Okay.
All right.
What is BBO?
Best bid and offer. It's showing you where people are bidding and where they're offering at the best one. So for example, if we zoom in here and take a look at it, this is the best offer right here. And there's liquidity here. There's 37 contracts here. If there were none here, then the best offer would be up here.
They would spread out a little bit.
Exactly. So we can see some of these spread, every now and then, like here's just a 2-tick spread, but there's no liquidity here, right? It's up here. So the best offer is 2 ticks above. The best bid is down here.
What's crazy is you have to zoom into a fraction of a second to catch it, because it's like so fast.
Yeah. Well, you can look at Amazon or something and you can see like a dollar spread or something,
Yeah.
Actually, well, they changed. Let's look at something that has a higher price. Yeah. Oh yeah. See the spread in here, quite in Tesla, quite a bit bigger here.
That's so interesting. Okay, cool. All right. Next thing, what's a microstructure?
That's a good question. And I think this to be technical about this, this is where you really do have to zoom into it's sub-second levels. And you have to be kind of careful here because there's a lot of quants and traders out there that say this is not microstructure, what you're showing. You really have to zoom in and that you really see all of the order activity in here. And we're looking down here at millions of seconds right now. We can look at billions of seconds in Bookmap here, and nanosecond resolution. Now we're at nanosecond resolution here. Now, of course, we don't visualize or we visualize it, but we don't trade at those time frames unless you're an algorithm. But this is microstructure. Now, when we zoom out and we look at this kind of structure here, it's pretty low time frame, but we're looking at 10 seconds here, right, between each vertical dotted line. And technically, that's not microstructure, but it's pretty low time frame.
That just sparked a random question in my mind. Is there any kind of like API for this where if somebody wanted to build algorithms using signals? Oh, there is. Nice.
Yeah. In fact, we have a few for demo, which you can use to trade if you like, called Chase, Escape, and Execute. In fact, a lot of times you'll see like algorithms kind of, you see how this kind of, you can kind of see it dark around the price right now. During rollover, you'll see this a lot better, but you'll see like one algo here and one algo here, and it's like a halo around price. And you're like, what's going on there? Maybe the NASDAQ shows it a little bit better. Yeah, see, these are like stacker algos here. They're kind of like pulling and adding very close here. And they're saying like, well, we're going to be in the queue, but we don't want to trade right now. Once they want to trade, they'll stop pulling and they'll just stay in the order book. And we can actually mimic that with our API and use this. It's called Chase and Escape, and we'll use this together here. We're one limit buy here, one limit sell here, but you can see how it's kind of mimicking that behavior in here of the these algos that are pulling and adding here. Very simple answer to your question. Yes, you can program the API in here to trade automatically in Bookmap.
Yeah, that's awesome. I want to dive deeper into that.
Yeah, you can see it's kind of volatile, so it's getting filled in here. But anyway, you can see the action of the best bid and offer adding and pulling away from the market.
Yeah, very cool. How do we recognize liquidity exhaustion?
Yeah, good question. All right, so really great question. These are fantastic. Here's exhaustion right here. All right, in the NASDAQ. The market came up here. It traded back to this area. And let me, I'm just going to dim the heat map for a moment here. Okay, because exhaustion is not about the heat map. It has nothing to do about the limit order book. It has to do with the aggressor. So we see that there's some buying and selling down in here, and we trade back up to this area right here, but there's no buyers. The market is exhausted at this point. There's no one that's interested in trading. So this is where we can look for, you can look for mean reversion type of trades, or, just once you start to see some selling coming in, they're likely going to trade it back down to a high volume node, which would be right here, due to the chart range volume profile. So, just some that's a very, very quick scalp, but you'll see this on higher time frames. It doesn't matter. It just, if there's no interest in trading, that's basically means the market is exhausted and it looks to trade where it can, where there was previous activity. The market is just trying to fulfill orders, basically.
Yeah, for sure. Okay, next question. Sorry, we're going to get through these. Sweeping the books. Can you explain sweeping the books, and then how to differentiate when there's a change in the, like a change in the structure from the sweep, as opposed to a sweep that just comes right back again?
Sure. Great. These are fantastic questions. All right. So a book sweep, an order book sweep here, for example, this is nothing but buying here, right? So this is an order book sweep, meaning that from this level here on up to here, it took all of liquidity at all of these price levels. and that is an order book sweep. And you can see that the best bid and offer catch up afterwards, after the sweeps. This is another good one here. It's a small one, but it's good. It traded up into all that liquidity, traded all of it, and then it stopped. Now, typically, an order book sweep is also a stop run, typically, meaning that stops are triggered along the way, and it's just cascading. The next level swept, the next level swept, the next level swept. It keeps hitting stops along the way. And we can see that these are indeed stop runs. We can see a spike here with the red line to the upside. So that's an order book sweep. Now, your next question was about it filling.
Well, yeah, the question of, is it just to go grab those stops, or is it that they're trying to take the market to a new level? I assume it would be like flipping the order book, right? At the same time.
This one is, I think we have to be very careful about because this is the order book or the order flow event is the book sweep. What matters after that is, the participants after the event. Okay, because there's a stop run above a price level, that is meaningless. We just know that it was a stop run. Maybe price comes back down here to this level here at 668, and we find more buyers, and they're interested in trading higher. So that's what we want to know. Just because it's not like a conspiracy theory on stops or something that we get this order book sweep, and then that's a stop run, and then price is going to come back down into the range and then go, a million miles, to the downside. It's about the context after the order book sweep. What does it mean? Are there still buyers interested? Are they buying? Is the bid supporting it like they are here? Right? Then we're looking for it to continue. So there was a stop run. Yeah. Okay. So great. But, are there still interested buyers above that area here? Okay. And then you can see that there were for a little bit. And then here's where the sellers really, really nailed it. Okay. So look where they dropped it below the 668 down here. Okay. And then they took control of that market. So in this case, we had the stop run. And now the context is, there's some back and forth and you're back and forth. And the sellers come in and they take control.
Perfect. Right? Yeah, exactly. Watch when you see the sweep happen, know what it is and know what to look for afterward. If it's a sweep up, do we have new buyers or do we run out of people and it comes back down? Perfect.
Yeah, exactly. These are the areas to watch. And in here, and also maybe up in here at the top of the, or kind of bottom of this range here. Especially this one, the 668, because we're looking for if we get sellers below it, and then they'll sweep the order book. They'll sweep the order book down into lower levels where there's lower liquidity down here or something. But it's understanding that context here. Here's the stop run. The context is it didn't accept above 668, and then sellers take it back down.
Very cool. So just real quick, can you just define what an aggressor is and how you can tell if they're being absorbed or not?
Absorption is what we were showing earlier about with those icebergs, except they were hidden orders that were absorbing. In absorption, now the true definition is something like this up here, like it trades up into this 670 level and it can't get through. It totally absorbed all this passive limit sell order absorbed all of the buying pressure. There were no buyers that could trade through it, and that would be absorption. Okay, so this is kind of absorption followed up by some exhaustion here. Actually, in fact, this is where you can start to look at and put patterns together as well. Now I know this is very small time frame, but this is a double top. We have absorption on one into high liquidity. We have a retest back here and there's no one interested. On your double top, it retests back up here and there's no one interested. Look for sellers around this area down here and they'll trade it back down to here and maybe lower, right?
There you go.
So, that's where, again, this isn't like rocket science or anything. Like it's just an understanding like, okay, there was high liquidity here. They traded into it. They couldn't get through it. Price retested back up here. and there's no one there.
Mhm.
Where are the sellers? Here they are. Okay, so look for them to drive it back down to some of these lower levels in here.
Very cool. Okay. So the last thing I just wanted to go back, we started talking about the CVD and then we got distracted by icebergs.
Yes,
What is that and how do we use it?
sure. So cumulative volume delta is in the subchart here. A very, very simple indicator. Is just taking the aggressor volume, okay, which is the market buy and market sell orders. If it's a market buy order, it is a positive number. If it is a market sell order, it is a negative number and it adds them together. That's the cumulative part. So it's just showing your volume of buy minus sell over time plotted on the subchart. That's all it is. So now where this gets interesting for reading it and using it is starting to understand, you can look at absorption or exhaustion in certain areas. And you can look at divergences. A lot of traders look at divergences. So for example, here's really nice divergence. So up here, we got buyers, buyers, buyers. And then due to this selling in here, and then see the buyers came back up and retested that same area again here, but on less buy volume. Okay,
Yeah.
so and we can see that, we can see it in the dots in here as well. There's just not as many buyers. So this cumulative volume delta, although price made an equal high, just about an equal high, cumulative volume delta made a lower high. Okay, and we get another retest up here. Now a slightly lower high here, but there's even less buying in here. So it's just showing again, like up at this top level here, there's not very much buying interest. And that's a cumulative volume delta is showing that. Also the dots are showing that. We look for, it depends. Like I don't like reading and relying so heavily on an indicator. But if it shows you something in here that you can't see in the transactions and in the dots, now you've got something. Look at the sellers come in and pound it, and they a lot of selling in here, but they pound it down to where bottom of these ranges in here, and the buyers come in yet again here. So this is a lot of volatility here that we saw earlier this morning. But anyway, many different ways to look at the divergence. There's also negative divergences, etc. But cumulative volume delta is a very, very simple indicator that can show it.
Very cool. All right. Well, I think that's all the things I had questions about. Let's just jump into the chat and see if anybody had any questions. I'll just give me 1 second. I'll dig in here.
Okay. Hot Carl. It's been alleged that Bookmap is developed specifically to feed misinformation. Okay, this has got to be a joke. Misinformation to inexperienced traders. Any comments on this?
No, I know what he's talking about. This is a real thing. So I was afraid of order flow for a long, long time because I was under the impression that since there is spoofing, that it's designed to trick you. This is something I thought, why would anybody want to look at a thing that's designed to trick you? So if you can explain how using this as a tool, you can see it.
This is the most truthful and objective view of the market I've ever seen. And the reason being is nothing's hidden here. And what I like about it, or what I think most professional traders that use this, or any traders that use this, what they like about it is the objectivity of it. It's just showing you very simple data, but it's showing it and uniquely kind of visualized. And that's the advantage here. So we're just showing best bid and offer, transactions on the best bid and offer, what is the order book, buyers and sellers in the limit order book with the passive orders. That's it.
Yeah. So the short answer for him is like, it's just a way to look at the information. The same thing is happening in the market, whether you can see if they're spoofing or not. It's just, do you have the information that you can see what's going on?
Well, I mean, yeah, here's the alternative is to look at, let me just bring up something here. If we look at just your regular candlestick chart here, that's misinformation. I mean, well, it's not, it's just a lack of information. You're getting a lot more understanding of who's in at these areas, what the interest is, etc. I don't think, I mean, we're capturing all of the information. It's not being hidden from you. And if you do see misinformation, or not misinformation, but like in the S&P today, like, oh, it was all over the place. Like this is that 95 level here, where we saw the iceberg buying in here. I mean, you don't know what's happening here, right? You don't know unless you know that there's an iceberg here accumulating. That's showing transparency. It's not hiding or giving misinformation. It's giving you more insight.
Couldn't agree more. All right. So next question from RK. Can you talk about some of the settings like clustering? What's clustering?
Yeah. Good question. God, these are great questions.
Dude, I have the best followers. You need to know that.
I may need to borrow your question list. These are really good. The volume dots here, like right now, we're showing just about every transaction. Maybe you don't want to see every transaction. Okay, maybe like this is just too much volume and too much information. There's a lot of traders, they just want to look at the majority of the transactions. So we'll right click on it. We'll go to the volume dot settings here and the clustering. There's different ways to cluster the volume. So one is by time. And here we did it 1 minute. And every minute you can see there's a volume dot here, spaced out very equally here. Okay, so each vertical dotted line is at a minute right now. So it's showing where that volume transacted within this 1 minute period. And it's showing you the delta and the VWAP. So a lot of times you'll see like like here, the actual transactions outside of best bid and offer is because it's on the VWAP from that last minute here. This is where the majority of the volume traded, and it was mostly sell volume by far. So that's one of the clustering by time. Another one is by volume, which is great. So you want to look at 500 transactions. All right. So when 500 transactions took place and when the next 500 transactions took place, give me a volume dot. All right. Now the smart clustering is kind of a combination of both of those together. It has a slider in here that you can use. So it actually kind of has like a sphere of influence by time and volume. And if I use the slider here and go way over to the farthest right-hand side, there's only one volume dot and right in the middle of the chart. So that's not helping us too much. But if we go kind of in the middle here, what it does is it starts to kind of take where that volume traded by volume and by time, and then cluster it together. You'll see it if we zoom in here maybe a little bit and take a look at some of these areas in here. As soon as I start to cluster it, you see how it'll start to take away, and kind of like water droplets kind of attracted to a bigger drop.
Yeah, it almost like simplifies it to like being more visually easy to understand.
Yeah, exactly. So that's what the clustering does.
That's very cool. Man, there's so many settings in this thing.
Yeah, there are.
So Sanju has a question. I think I could probably answer this one. He says, experts of this tool are successful in trading on a consistent basis, ? Like any other tool that you have available to you in technical analysis, all it is information. How good you can use that information requires practice. Like I always use the example of a guitar. I could teach you all the chords on a guitar. That doesn't make you a good guitar player. You have to spend years practicing using those chords. So this is exactly the same. Would you agree, Bruce?
It's a great way of putting it. And it's like, I use the analogy again and again. I haven't used the guitar, but like an artist using a woodworking tool, or like, let's say a driver, in a Formula One race. You can put an F1 driver in a Ford Pinto.
Yeah.
And you could have the F1, McLaren, whatever, car. Clearly you have the best car, but he's probably going to win. It's about being able to use it. So the data is here. It's about what and that's why we have pretty extensive education, is to, and exactly why you're having me on today, I imagine, is to start to unfold, like, okay, look at the market maybe in some of these other ways to get insight, more so than what you would with your candlestick chart or whatever it is that you're looking at. And I'm not, I don't think, I think it would be wrong to say like, oh, you should just use this and not look at anything else. Look, just there, you're going to see so much more and get more insight due to this information and data here. So we can look at a candlestick chart, right? Okay, well here we're actually getting a sell sign on a candlestick chart, right? Here's your doji, and then now we're below it here, right? Well, actually, I would agree with that. This is pretty good. Look at the selling down here, right? It traded into this liquidity. It bounced a little bit, but we see more selling. Now they're on the offer here too. So this is helping me confirm this candlestick pattern. That's all it's doing. What I would look for is more sellers right here, right now, to trade down into this liquidity down here, maybe 90 or 89, something like that. Or I guess 90. That's what I would look for in follow through, due to my candlestick pattern and order flow within that candlestick pattern. That's it. Now, what if we get a different scenario in here? What if we get this candle and we get a close below this little area here, like right in here, but you see a lot of big green dots in here? That's not giving you a very good signal from the order flow. The candlestick still saying, go short, basically. But the order flow is telling you something very, very different. Or what if you see just a wall of liquidity on the bid down here, right? Well, this is meaningless, right? This candle is meaningless. What if you see a ton of, like up here, it exhausted out. Look at the exhaustion up here. We just think that there's just more transparency here.
Yeah, I completely agree. So Cortman is asking, any tips on using Bookmap for the NQ without getting lost in the nuances? I too have noticed it seems almost like it's too much going on. Is there any tips for that?
Yeah. The ES has been usually for years, like I was demoing just the NQ because the ES was just horrific. Like you'd only get like a 2 or 3, 4 point move and you'd be there all day, So no, you can still use it on any market in here. The moves are just more volatile and you can look for extended ranges in here. So here, for example, the NQ is actually starting to kind of like, some of that liquidity traded in here, but this is pretty good buying. Is bouncing off of here. Let's see if we get more liquidity on the bid here, and we're not. Okay, so that looks like they're going to try to push it through and down into maybe 05 or 600 down here, right? But this little move here, if we did get buying here, right, we can look for it coming back up into some of these ranges up in here. So it's still the same thing. It's just a lot more volatile. Like price can easily shoot up here to 615. If we get enough buyers in here, it doesn't take much. If we look at the order book in here, there's 10, there's 12, like, contracts in here. It doesn't take much for price to move back up. So you just kind of have to widen it out a little bit longer. Yeah. And that's about it. I really like the way it moves in the NASDAQ, typically because the move follows through. You'd look for an order flow move and it typically just follows through immediately. Like this move down, into 600. It looks like it's destined, but and there it goes. The follow through is really great. Well, the ES, what it would do, it would come down here, it would kind of go back, you'd go back and forth in here, and finally maybe it'd come back down here. So you can look for the follow through to happen a lot quicker, I think, in these markets, and also kind of skid through the zones before you start to maybe see some sort of order flow that goes the opposite way.
Okay, so a question from Nap here. what time frame is best to view on? Another way I would phrase that question is like, what time frame is this most valuable to traders? Obviously, it seems like scalpers are going to get the most out of this, but do you feel like longer term time frames can still find value in it?
Oh, absolutely. There's all sorts of webinars we've done in the past that address the higher time frame, and what we see in it now. Yeah, sure. If your time frame is to trade on very low time frame and scalp, sure, it's great. But let's just zoom out here, okay, and let's just look at the day here, for example. All right, so this little pullback in here, actually, see, I didn't even notice it because I didn't zoom out. This pullback up into here, look where the sellers came in. They came in here and drove this market quite a bit lower. The buyers just came back up here and can't get through this area. And then we saw the sellers come in, and we saw them right around in here, I think, and then we're looking for 600, and we got the move. So here's your higher time frame, and you can look back at your level here for the day. Now, if you want to look at multi-day, you'd need more liquidity in here, or more data in here. That's one way. So you'd leave your bookmap open overnight or something. But another way is just like very, very simply look at your higher time frame charts in here. Okay, we'll go back to that candlestick chart, and look at your levels in here, and what's the order flow look like now. So you're kind of waiting, you're watching, it's coming up to a level of interest here, and then now you want to understand what's going on in the order flow. So jump over to bookmap and start to take a look.
Here's just the last question we can end it off with. Is there a differentiation between traders that are putting in iceberg orders and dark pool specifically?
Yeah, big difference. So a dark pool is only for stocks. It doesn't happen in futures. It's an over-the-counter transaction. So it did not happen at the exchange. Okay, so it's not in the limit order book. You're not going to see it. We don't know if it's a buyer or a seller. It's just you'll see it if you have the MBBO data. You'll see it every now and then on stocks. You'll see a big transaction someplace, but yeah, you'll see it. And a dark pool transaction, again, is an agreement between traders outside of the exchange, but the data is recorded. The transaction is recorded. The iceberg order is hidden order. That is just, it doesn't, the goal of the trader is not to show their size so that they scare the market away. They want to get filled at their specific price level.
There you go. All right, Bruce. Well, thank you so much for doing this, man. I really appreciate it. It's been a lot of fun, and I look forward to hanging out with you on the Bookmap Discord at some time in the future.
Yeah, absolutely. Looking forward to having you over there. Yeah, thanks, Charles, and everybody. This was a really good a session here, and really, really great questions. Thank you.
Thank you so much for watching. And if you're interested in checking out Bookmap for yourself, there's an affiliate link in the description. You can get exclusive discounts if you click on that link, and it of course helps out the channel. And if you have any questions for me or Bruce, please leave them in the comments below and we'll do our best to get back to you. Smash that like and subscribe for more content like this. We'll see you on the next one. Onward and upward, pirates.